One of the biggest mistakes that beginner traders make is spending hours scrolling through charts trying to find a good trade. If I asked you to find the strongest stocks in the market at any given time, where would you even start? The answer to that question for me and how I trade is exactly what I'll be going through in this video. Why I scan. The scanner in its simplest sense is basically just a filter. I don't use a scanner to tell me when to buy a stock. I use a scanner to filter down thousands of stocks into a handful that are actually good at any given moment. Think about it like this. If you could have a magic tool that let you scan through tens of thousands of stocks and find the strongest stocks at any given time in any market, would that not be the number one thing you should consider if you're swing trading? The answer should be yes. So for me in swing trading, the whole idea of the game is to be in the strongest stocks at any given moment. So before I even think about entering a trade, a stock must fit certain criteria for my setups. And for momentum trading and swing trading, this is probably the number one factor to improve your success rate. If you're buying a stock, you want a stock that's uptrending and strong, and the number one reason for this is it shows other people are buying the stock and you're just riding the wave. Do you really want to be in a stock that's getting sold constantly at every push up? There's people trapped wanting to exit the stock and wanting to cut their loss. No, you want to be in the strongest stocks at any time that are moving upwards. And it's not as simple as just buying a stock that's in an uptrend. You need to look for certain things within the uptrend for it to be a buy. So for me, the first step in this trading process is scanning through the thousands of stocks to find the ones that fit my criteria, and those ones go into a watch list, and from there I look for certain setups and certain breakouts. So before I even look at a chart, I know my stocks fit a certain criteria and a certain minimum standard for it to at least be considered a buy for me. My trading philosophy. The biggest shift in my trading happened when I stopped trying to look for value picks and stopped trying to look for when a stock looked cheap to buy. Stocks that are cheap tend to stay cheap, and there's a reason people are selling those stocks. If a stock's down 80% from its all-time highs, you really think you're going to pick the exact bottom? And even if you do, it still might chop around that bottom for months. You're just sitting there wasting money, and opportunity cost is just going out the window. I'm not interested in catching the bottoms. I'm interested in riding the wave of buyers. If stocks are in an uptrend, there's a reason those stocks are uptrending, and it shows that there's buyers in that market. Those are the sort of stocks you want to focus in on, and those are the stocks you want to buy. I don't want to be buying the cheapest stocks waiting for them to recover. I want to be in and out in a strong stock that has buyers riding the momentum. In short, it's always better to be buying strength than buying hope. Buying strength is a repeatable strategy. Buying hope, it's just gambling. So if that's the philosophy, how do we find these stocks and what do we look for? The scanner. These aren't magic filters. Everything in my scanner has a job, and every filter has a reason behind it. So the first filter in my scanner is to only show stocks that are currently uptrending. And the way we find this is the shorter period moving average above the longer period moving average. And so for me, I use three. I use the 50-day moving average, the 150-day moving average, and the 200-day moving average. You want the 50 moving average above the 150-day moving average, and the 150-day moving average above the 200-day moving average. If you just scan for this filter, you will only find stocks that are uptrending and showing signs of strength. Just this filter alone could find you many good viable trades, but still there's nuances to that. Once you find these stocks in these setups, there is a time to buy, and getting them on your watch list doesn't show that they're a buy. The second filter I use is within 30% of 52-week highs. The reason behind this filter is you don't want to buy stocks that are too sold off from their highs. If stocks have come off too far from their highs, you'll have a lot of people that have bought that stock that are looking to get out and cut their loss. So it tends to be when those stocks push up a little bit, there's more selling for people cutting their losses and getting out of that stock. If you're buying a stock at its 52-week highs, any move past that 52-week high, everyone that has bought that stock is in a profit. There's no one looking to panic, exit the position. Everyone's in a profit, and the momentum can continue with less resistance. Third filter is market cap above 1 billion. The reason why I use this is I want to filter out all the illiquid stocks, all the stocks that are too low market cap, which are more prone to gapping up and down. And if you buy big positions, sometimes you can't exit if there's not enough liquidity to let you sell at the market. So I only want to be buying bigger name stocks above 1 billion market cap for liquidity reasons and for less chance of gapping up and down. Those three filters form the foundation of my scanning, and that scan alone will show you the strongest stocks at any given time out of thousands of stocks. It'll show you stocks that are in an uptrend. It'll show you stocks that are within 30% of its 52-week highs. They're not too sold off. There's not too much overhead in it. And it'll also filter out the illiquid stocks, so it reduces the chance of getting trapped and it reduces the chance of market gaps. Just those alone, if you scan for those stocks and you only buy those stocks, the odds of you doing well increase dramatically. But just finding those stocks alone isn't enough for a stock to be classified as a buy. After you scan for those stocks, put them on a watch list and we'll look for certain things within those stocks that make it a buy. Here's the thing you might find surprising: the market. People always ask me whether I care about what the market's doing. Did you see the market's down 5% last night? I couldn't give a This might surprise you, but I don't spend much time looking at the indexes and I don't really give a what they're doing. For me, in the way I swing trade, this scan alone will find the strongest stocks at any given period. So if the markets are selling off, it'll still show the strongest stocks at that time. And let's just say, for example, the Nasdaq is down 5%. The Nasdaq is at the moment mainly driven by AI stocks, which are at crazy valuations. They might continue, yes, but crazy valuations. So if the US tech comes off 5%, I'm not buying breakouts. In markets, there's a certain thing called sector rotation. And when a certain sector becomes out of fashion, other sectors come in and the cash moves from one to another. So for an example, if AI stocks start to get hit now and start to get sold off, you might find an increase in healthcare stocks. You might see healthcare stocks setting up and breaking out while the indices and while the S&P 500 and the US 100 is selling off, healthcare stocks could be setting up. And that's what I'm scanning for. And if those healthcare stocks are breaking out and their breakouts are following through, I'm still trading. I'm not trading because the index is selling off. But here's the thing that's really important. The thing that drives my trading isn't the indexes, it's whether the individual names are breaking out and whether the breakouts are following through or not. So for me, I couldn't give a what the index is doing. If the stocks that are showing up on my scanner and the setups look good, but the breakouts keep breaking out and failing, that's when I'll start to go, all right, something's going on here. You don't look at the index to tell you when to size down and size up. You look at the individual names and whether the breakouts are failing or whether the breakouts are continuing. That should drive whether you scale up or down, not the index. So here's what I'm getting at. The scanner isn't the buy signal. Just because a stock appears in my scan doesn't mean that it's a buy. So what I'm looking for in these stocks is pretty simple. I'll scan for the stocks that are strongest at any given time that are uptrending. I'll put them in a watch list and I'll look for certain things in that chart. The things in the chart I'm looking for is certain patterns and certain setups that give me the inclination that the stock might break out and continue. So what that might look like would be a move up followed by a simple bull flag is one of my favorite setups. And the break of that bull flag would be my entry signal. Not because it's landed on my watch list, but because the break of that bull flag signals that it's a buy, tells me where to put my stop and where to put my take profit. I'll go into the individual setups that I like best and that I use for my trading in the next video. So if you're interested in that, subscribe now so you don't miss that, because it's a very important step of this trading system. So here's the thing about swing trading. With day trading, you can be buying long and short. With momentum trading and my trading strategy, I'm long only. So I'm only buying, I'm not shorting. The hard part is when breakouts start to fail and there tends to be fear in the markets, breakouts just aren't going to do as well in general. There might be some sectors that are still running hot and I might trade them and might be a lower position size while the market's a bit iffy. I'm still trading, just a lower position size. But the reality is there's better markets and there's weaker markets for swing trading. The things that I do and the things you should change when these sort of markets occur and the bad times do come is to scale down. So if breakouts are failing and they're not acting as expected, the thing to do is to scale down. So cut your position size in half, pull your stop losses up, don't risk as much. These are the times that you don't want to be out of the market. You just want to be risking less and sort of just feeling out the market. When those breakouts start to follow through again and you feel the momentum shift upwards, that's when you scale back up and you go back to normal size. So if you take one thing away from this video, remember this. The market is always telling you where the strength is. You just have to find it. There's always opportunities. And I hope you got something useful out of this video because that's what I'm doing this for. I'm not selling you a course. I'm literally just telling you the way I trade, the way that works for me. And I want people to be trading better and people trading with structure, with reason behind their trades and with thought behind their trades, not just buying shit and kind of hoping for the best. Use my game plan, take shit from it that you like, don't take shit, it doesn't matter. If you have a game plan that's proven to work in the long run like this, it'll save you so much time and so much money. This works for me and I hope you could pull some useful things out of it for you. And if you're interested in this sort of trading, the next video I'll be showing what makes a stock go from my watch list to an actual setup that I'm looking to buy. I'll go through the setups that I look for. I'll go through what tells me that this setup might work better than others. And I'll go through where to position stop losses and take profits and how I handle that side. So yeah, if you found this helpful at all and you took any nugget of wisdom from this, please give it a like and a subscribe because it helps so much. I've really been enjoying making these videos because I really want people to enjoy trading and do it the right way because there's so many bad ways to do it. You see so much shit out there of people just flashing their Lambos and not even trading, just selling you a course. They don't trade. Trading is discipline, trading is structure, and trading is having a system that wins more than it doesn't. In the long run, you make money. It's 100% scalable, and that's why I love trading. If you can make money with a $1,000 account consistently, you can do it with a $100,000 account. It's just practice, discipline, and consistency. So yeah, subscribe and like if it's helpful, please. It means a lot to me. And yeah, I hope you got something from this video, and I'll catch you in the next one.